Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of high-growth stocks. Last week, we highlighted just how vital perceptions about the future path of U.S. interest rates are for high-growth stocks and investor sentiment in the sector. Fed Chair Jerome Powell's speech at the Jackson Hole Symposium on Friday dashed any hopes that the market had about the central bank moderating its interest rate policy. Mr. Powell made it clear that he and his fellow committee members would continue raising rates to stop inflation becoming a permanent fixture in the U.S. economy. And he noted that this would come at a cost to U.S. households and the economy, saying that while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses, and that these are unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. Those comments were a body blow to the equity market and high-growth stocks in particular, with the Nasdaq 100 selling off on Friday by 4.1%, and only two stocks in the index finished the session in the black. There were some notable casualties on the day, with chipmaker NVDA falling 9.23%, dental tech business Align Technology slumped by 7.52%, and discount retailer Dollar Tree finished Friday's session down by 6.92%. The S&P 500 information technology sector sold off by 4.28% on Friday. 62% of the stocks within the sector made new lows, and less than 6% of sector constituents are now trading above their 20-day moving average. That figure had been above 90% as recently as the 18th of August. The S&P 500 Pure Growth ETF lost 3.99% as high weightings of NVIDIA and SVB Financial, which lost 6.37% in last Friday's session, weighed on the index. In the Russell 3000 index, Buy Now, Pay Later group AFRM dropped by 21.33% after weak Q4 earnings and guidance. Enterprise software maker Domo, Inc. also reported earnings and guidance that disappointed the street, and the stock fell by 27.8% as a result, demonstrating that Friday wasn't the day to be delivering bad news. Despite the general doom and gloom, there were some bright spots amongst high-growth stocks. For example, Everbridge, which makes communications and messaging software, rallied 17.39% as the company announced that it was considering its options, including putting the business up for sale. That news followed earnings that blew past forecasts, with the company posting EPS of 3 cents per share compared to analysts' estimates of a 12-cent loss. The company also raised its guidance for the coming quarter. High-growth investors have proven to be a hardy bunch in 2022. However, their resolve looks likely to be tested further in the fourth quarter, when the ability to pick out winners in what could be a bear market will be crucial if they are to finish the year with positive returns.